Bro, I'm trying to tell you the strategy is insane. I'm giving it away for free. I should be selling it, but I'm gonna give it for free. Hey, do me a favor before we get into it. I want you to like, comment, and subscribe. If the strategy was helpful, send it to somebody. Peace. All right, so this is my success with the strategy. I post my wins or my losses in my Discord all the time, so you can be able to follow along. We also do a live trading session that I'll mention at the end of this video every single day for exclusive members, so you don't want to miss that. So here are some of the moves that I've been able to catch. This is just within a week time frame, so been able to really do some cool things with the strategy, and I want to be able to give it for free. So first thing, in today's video, the goal is to make consistent profits after the trend is already moving using a continuation strategy only on the 1 minute. So the 3 steps is you want it to either push up and down on a higher time frame, go to the 1 minute time frame, and you wait for 2 mitigated fair value gaps, and then you enter off the most recent fair value gap after the second one's mitigated, and your stop will cover the swing high or swing low. The reason this is really cool is because you don't have to do a full top-down analysis. The first thing that you're doing is you're focusing on the higher time frame push, and then directly after that you're dropping to the 1 minute. This is what it would look like on a 4-hour time frame or a 1-hour time frame. And then if you zoom down and go to the 1 minute, this is what price would look like. What we're gonna do is we're gonna identify each mitigated fair value gap. Mitigated, boom, that one was mitigated, this one was mitigated, and this one. And so directly after that, you can enter a trade, and as you see, it kept going and there was a 1 to 20. It works every single time. The only reason you would lose on this is because price is done dropping. The strategy is insane. When price is trying to get somewhere, so say if you go to a higher time frame, you see that there's a higher time frame fair value gap or order block or structure, or even if you trade support and resistance, you see that price is trying to get there, you can go down to the 1 minute and follow price as it breaks structure. So you only use the higher time frame to make sure price is rejecting off of something or going somewhere. As you can see in this example right here, price literally pushed all the way up. You could have caught a move right here on the 1 minute as price is going down to this fair value gap. And so price rejects, hits this, and then literally goes up. This strategy is crazy, y'all. Bro, why haven't you commented yet? Bro, comment on the video, bro. This is free game, bro. Come on. This works on stocks. This works on crypto. This works on Forex. This works on futures. This one is a futures pair right here. Step 1, higher time frame push. Price is making one continuous move, and then you drop down to the 1 minute time frame, and you see that there's 3 fair value gaps that were mitigated. And so the first one got tapped, pushed up, broke structure. We'll talk about that in a minute. Pushed up again, broke structure, made another fair value gap, tapped in, and we'll talk about why we put our stop losses at the swing low. For the third one, price literally comes up. Okay, it broke structure right here, dropped to right here, and shot up. So that's literally how it goes. Step 3, you make sure that price breaks structure before entering. And so we went through that, but you see that price pushed up, came down, pushed up, broke structure, came down, and then flew up. This is what you would have caught for it. We caught, I think, a 1 to 3 on this one, which is really cool. The rules of the break of structure are so important. The way that I do a break of structure is it has to be a body close over a wick. For me, that's a real break of structure. A fake break of structure, wick closes above a body. The reason I don't use break of structure that way is because a lot of times that's where liquidity lies. A lot of times that's where people get faked out. A lot of times that's even where the trend will actually stop and the price will start ranging. And if you watch my videos, you know I always lose in a ranging market. That's why you have to be very careful of what a real break of structure is. Price always breaks structure when the body closes above the previous high or low. Let me interrupt the video real quick. Join my free Discord. I'm telling you, we catch moves every single day. All right, y'all be good. Peace. I don't even need to look on a higher time frame to know that price is just pushing. So let's just say that we got in right here. First thing I see is that there's a fair value gap that was mitigated, and then price broke structure on this low right here. So for me, I'm like, okay, that's a good sign. I need another break of structure. Price creates another fair value gap and fills it, but it also breaks this previous structure. So boom. And then so I'm just looking for the third one that breaks the structure. Price closes below this candle right here. I'm absolutely getting in. And as you guys can see, that's why we cover the wick. It actually hits the order block, which backtest it and you might be able to get in, but we get in at the fill of the candle. And as you guys can see, price literally just melts. It just melts forever, bro. Literally melts forever. Like, you would have made so much money on this trade, man. Literally, this is June 23rd, and I caught a move last night. It's Wednesday. I caught a move Tuesday night. So I didn't trade today, so I front tested. And literally the same thing happened today, where I was like, oh my gosh, bro. Like, I could have caught a crazy runner on my funded account, but I didn't, and that's okay. Like, I'm cool with my wins from last night. That's literally how it goes. So if you were to hold it like a madman, you would have caught something crazy. Let's look at a higher time frame. So okay, we know that there's a big push. Okay, obviously on a higher time frame it's pushing up. What I would do is I see this breaker structure right here. Again, I primarily trade gold. I use the EMA just for directional stuff. So price broke the structure, created a fair value gap that got mitigated. This strategy gonna help some people, boy. Price created 2 fair value gaps. Now, this is a good example right here. What if it doesn't mitigate a fair value gap? Then you gotta wait. You gotta wait for that thing to get mitigated. So what if a fair value gap was created right here and then another one was created, but it mitigated the most recent one? That's fine. You would count that as number 2. The third fair value gap that I see, we would enter directly off of this one. You would have had a little bit of a scare. That's why you set your trades and just forget about it. Put it below this order block right here, and you would have caught another runner, bro. 1 to 6, you would have 8. I mean, imagine you just got off of catching a 1 to 12, meaning you're risking $100 to make 1,200, risking 1,000 to make 12,000, and then right after that, you risk 1,000 to make 6,000 or 100 to make 600. I mean, or if you wanted to be risky still, you literally could have just kept going. I primarily trade futures, but this is GJ. Love me some GJ. If I ever go back to Forex, that's gonna be my primary pair, maybe my secondary pair, but I love GJ so much. You would have caught almost a 1 to 10. You would have caught a 1 to 10 because it just kept flying, bro. It just kept flying. So that's why this strategy is really, really cool. And I believe that it could bless some people because it's so simple, man. It's so simple and so effective. So the primary pairs that I would recommend people trade this on, definitely gold, definitely NAS, GJ, EURUSD, and if you trade futures, then I would do the S&P 500. Backtest this and let me know how it goes for you. If this was helpful, don't forget to like, comment, and subscribe. And bruh, why haven't you joined the Discord yet? It's free.